is what people are willing to spend on it. The markets move and react to the information that people are exposed to. That information is presented across multiple mediums in highly ineffective and chaotic ways. The Old Boys Club. Next slide. The Wall Street Journal, the Financial Times, these mediums are presenting investors with walls of text. Money managers, regular Joes, are riding the train, reading yesterday's news one page at a time, looking for the stock that interests them for today's trade. Next slide. Financial news sites like The Street, Yahoo Finance, Motley Fool aggregate news, but they aggregate news for their patrons, but the users are being inundated with cluttered pages upon pages of links. These sites are focusing on a few key distributors of financial market analysis. However, they, along with the traditional print media, lack the voice of the little traders, and there's a lot of them. Social media is giving a voice to the masses that move the markets. The problem investors face is the impossibility of quantifying the overall sentiment of the market in the social media landscape. Everyone's voice is all over the place. What are the people saying right now about the markets? Recent innovations in enterprise content management has paved the way for a new evolution in big data analytics. This emerging and maturing market has already made waves in the compliance and risk management, brand management, predictive modeling, and marketing campaign sectors. We're going to apply proven, innovative sentiment analysis techniques to the financial market sectors by aggregating traditional investment research with the voice of the masses. Can we go to the next slide? And flip it over to the site. We have a site? Okay. So we have a site up. Apparently we're having some problems. Okay.
Do you want to go to the site?
Livestock.com takes the same news, research, and hype that investors already spend hours sifting through and provides simplified user interface inspired by intuitive UI leaders like Songza and Sumli, which you may have heard was recently bought by Yahoo. In our slides, we have a discovery method in much the same way that a person would go through the newspaper and discover the stocks that interest them. We go through and we help the user find the stocks that matter to them. And ultimately, can we go back to one page, please? And ultimately, we take them to the stock that is most suited to their personalized needs, the stock that looks at the market research, that looks at Twitter, that looks at all social media, and tells them, this is the stock that's trending. This is what you would, on your own, have discovered if you'd spend the hours and gone through the papers and Twitter. This is showing, these are the stocks that are going to be an interest to you. And what we've done is what we're going to do is create a summarized version of everything that's out there, 400 character text, that very much like Sumli, but focus on the financial market field, as well as a sentiment analysis that graphically represents the what is happening, what's out there, 70 rating on Apple, and the why, the 400 characters of text, why is it trending, what's happening out there? And then if we click into that, we double click into it. Yeah. And we see the articles, and sentiment analysis can work on the individual articles themselves. Go back to the slides.
So basically, we want to just touch briefly on the opportunity, because there's essentially two pieces of this opportunity. They run in parallel. One is basically, you take something, you build it, you build a consumer base like Sumli did, and you really don't even make any money for the most part until you get enough subscribers and you either sell out to somebody or use your subscriber base to make big money. The real key to this, though, is that we're looking at a predictive engine that will help guide people towards correlating prediction with sentiment and actually looking to correlate that. So we've decided to go down both paths in order to really see what unfolds as time goes along. So we've put one together on the basics of our model. I don't want to get too deeply into the numbers because we're running out of time, obviously. But we look at the basic model and we think we can get away with doing this, going after just the pure consumer subscriber kind of model. And the upside of the whole thing is if we can get a model that actually does predict the market behavior, then that's the huge upside that really all these numbers get thrown away at that point because we can go a lot of different places.
Very sophisticated thinking. I think it's spectacular. Are you using both natural language reading into this, ontology, or are you using like a polyarchical ontology? And how can you get that type of ontology in real time and then parallel?
Well, yeah, the first thing I'll say is I actually work in the e-discovery space with a number of natural language processing tools and a number of machine learning tools that are algorithmically based. And I actually prefer the mathematical algorithms a little bit. He works with Gartner, and he's actually does research into this space. So both of us are pretty familiar, and actually we could spend 3 minutes just talking about that. But why don't you say something about that too?
Yeah, the research that's out there right now, there are these two different approaches, right? The natural, and regardless of which one you use, they're all going to be entailing a lot of human elements, a lot of, just creating a lexicon. And that's one of the biggest problems right now with the sentiment analysis that are out there currently, where you have things that are, predicting sports betting, but you can't just apply those to financial markets. Each individual sentiment analysis engine has to actually be, each one has to be customized for the market that it's being used for. And according to Gartner's research, the best current approach is the hybrid model.
Yeah, I think it's a fluid situation ultimately, and I think if you lock into one too early, you could go the wrong way. We could go with beta instead of VHS, and beta's better, but VHS wins. So what we're essentially looking at is you got to get into the game. There's a group that's been working with the folks at the Stanford Innovation Center called Sentibet. You can go and look it up if you like. It's actually a really cool thing. They're actually using sentiment analysis to predict the outcomes of sporting events to help people bet. And it's not too far away from what we're trying to do either, but what we're trying to do is a lot more sophisticated and has a lot more pieces to it. But what we know can be done, they've actually correlated to, they're producing results. They're actually, English football is called English football. It's a good site for that.
Probably have time for one more question.
Yeah, just following on from that. So what's your sense of the amount of time, effort, ultimately money, investment up front to actually get the engine working? Because obviously that's the key to it, having that predictive engine working.
So
yeah, we took a stab at it in the numbers. It's pretty rough. I would say it's pretty rough. We haven't. I wish you could analyze every single person you have to hire to put the thing together. It's a pretty big process, so it's a little rough for that. I would say there's a couple different things we've been looking at that we talked about a lot. Number one is there's a lot of people developing sentiment analysis engines right now, and it's probably really possible to partner with somebody. We're not averse to that. If we can save some of the hard work and not reinvent the wheel, as you were saying, you might be working on something. We should probably talk to you. But basically, if we don't have to reinvent the wheel and can wrap some young whiz kid in who's actually working on this, we'll do it that way. I'm not averse to just take a watch now. And
yeah, and just on the final note, at Gartner, which is I think the world's largest IT research company, there's a managing VP by the name of Jamie Popkins, who is an expert in this exact field. And this is a direct quote from him. Early adopter business case examples deliver enough value to justify the startup and ongoing operational costs. I mean, they're on board. They really believe that there's a big market to come out of this. And that's exactly what we're